Why is Bitcoin in high growth mode? Well, mature Bitcoin over 100 years, I think, kind of grows double at the rate of stocks because of all the reasons I pointed out. But high growth Bitcoin is in the next decade, where we are now and where we'll be for about a decade or 2 decades. And it's growing faster than that mature rate. And that it's growing faster because of monetary inflation, global unrest. Adoption is being driven by these massive inflation and global unrest. And so as people reallocate their capital from real estate and stocks and other assets and currencies, it's going to drive Bitcoin at faster than that long-term rate. And so you're getting an avalanche of retail adoption. You'll get more with a spot ETF. You'll get more institutional adoption with clarification of the ETF and accounting rules, etc. And things like FASB, fair value accounting, allow for corporate adoption. So right now, MicroStrategy is really the most famous company to adopt Bitcoin as a treasury asset. But imagine what happens when Apple Computer is buying $1 billion of Bitcoin a month. Or what happens if Microsoft, Berkshire Hathaway has $160 billion of cash. Apple has $150 billion of cash. These things are liabilities. So we still have a lot of corporate adoption to look forward to. And you're talking about, people that they could bring 5, 10, 20, $50 billion of capital to the market. So I believe we'll see that kind of adoption over the next 10 to 20 years. That will drive growth faster. And then when everybody understands Bitcoin as well as they understand the S&P index or as well as they understand commercial real estate, then we'll probably slow down to like a 14% or something. Now, over a long time horizon, laser focus is rewarded. I have laser eyes on Twitter.
Bitcoin's growth outpaces stocks, doubling in maturity, propelled by factors like monetary inflation, global unrest, and increasing adoption. The current surge stems from rampant inflation and global instability, prompting a capital shift to Bitcoin. Retail adoption is rising swiftly, and a spot ETF could escalate it further. Institutional adoption may climb with clarified ETF regulations. Corporate adoption led by MicroStrategy is nascent. Giants like Apple may inject substantial capital. The next 10 to 20 years could witness considerable corporate adoption, propelling Bitcoin's growth. Once Bitcoin equals traditional investments understanding, growth may stabilize at around 14%.
The point is, think out 100 years. Think why? Not because you're going to live 100 years, but because thinking 100 years is clarifying. If your family had thought 100 years in advance, you wouldn't be here. If your government doesn't think 100 years in advance, there would be no cities. If you're going to do great things, you need to look out 3 generations. It's very clarifying. And all of the mistakes, all the fear and anxiety that makes you do stupid things or makes you do knee-jerk things that destroy wealth and create chaos, they come about because people are thinking about 3 months or 3 weeks or 3 days or 3 years. And so my advice is for you when you're thinking about more than 4 years out, think about yourself, your life, your children, your children's children. Now, if your family or your company had $1 million, a lot of money, I grant you, but if you had $1 million, if you invested it, in cash, at a 7.5%, or 7% degradation, you're going to end up with $900 worth of value left after 100 years. Your money's going away. You're going to destroy all your wealth. If you invest $1 million in bonds at a 5% yield or a 5% pre-tax or a 3.5% after-tax yield and hold it for 100 years, you will lose 96% or 97% of your wealth. You'll go from $1 million to 31,000. Bonds will destroy your wealth. If you invest in the S&P index, you're just going to have the same amount of money after 100 years that you started with. You're not going to make any more. If you were to split that portfolio between the S&P index and Bitcoin, and this is assuming 7% for the S&P and 14% for Bitcoin, and assuming 7% monetary inflation that I talked about, you're going to convert $1 million into $512 million. It's extraordinary. And of course, if you simply invest the entire amount in Bitcoin, you're going to go from $1 million to $1 billion. It's 1,000x. You're going to double your money 10 times. And so you can see the difference between a mediocre strategy, a conventional strategy, and a winning strategy. So let me say it this way. $1 million invested for 100 years leaves your family with a real net worth. If you invested in the peso in ARS for 100 years, you will have 28 cents. 28 cents. If you invested in the US dollar, you'll have $700. You'll have $1 million in the S&P index of companies, and you'll have $1 billion if you invested in Bitcoin. So that's the big idea. Bitcoin is economic armor, right? When you think about it, we talk about it. If you think long enough, it is economic armor. It will protect you from the economic wars to come, and there really isn't much else that will. Now, let me just, spend a few seconds, a few minutes on counterparty risk, and then I'll wrap up here. Whatever you do, just make sure you don't lose the money, right? This is common sense. So when you're actually making a decision, an investment decision, you've got two things to decide. One thing is, what asset do I buy? And the second is, how do I custody the asset, or how do I avoid losing the asset? It's not enough just to buy the Bitcoin. You actually have to make sure that no counterparty steals, loses, or destroys your Bitcoin. So when you think about counterparty risk, your wealth can be impaired by the failure of any counterparty you're required to trust. And so there are three broad categories of counterparties everybody has to deal with. People, you're a counterparty, your family, your friends, trustees, people you trust, your lawyers, your accountants, your money managers, your employees, executives at a company you work at. They're all people, right? And you have to trust them. You also have to trust corporations, the issuer of the asset, the producer of the product, a trader, a developer, the custodian, the bank, the exchange, the network. If you own a stable coin, you're trusting the issuer of the stable coin, you're trusting the network the stable coin trades on, you're trusting the crypto exchange that holds the stable coin, and then you're buying a stable coin that represents probably the dollar, which is going to lose 99.9% of your money over 100 years. So it's a bad asset, in my opinion, over the long term, and you're going to have a bunch of counterparties, and you have to understand them all. So keep in mind that you're always trusting counterparties. They're either people, or they're corporations, or they're governments. You have a building, the district can rezone the building. The mayor can rezone the building and seize the building. The state, the province can seize the building. The government, is a counterparty. The federal agencies are counterparties. International agencies are counterparties. So when you're thinking about whatever you're owning, whether it's a building or a piece of art or a bar of gold or a stock or Bitcoin or a stable coin or a crypto asset of some sort, whatever it is you own, you only are going to get the return if none of these counterparties fail you. And so first thing to do is make sure you understand who your counterparties are. The next thing you got to do is manage your counterparty risk. Over a long enough timeline, every person, every corporation, every government will fail.